Ma'am.
And I just want to put it out there for the rest of the attendees. If you have any questions, you can put them in and I will moderate them to our speaker.
So yeah, there's a small request. If we can take questions at the end of the session, that will be great.
Yeah, we can do that as well.
Yeah, sure. So can I begin?
Yes, ma'am, you can.
Okay, so I'm sharing my screen. Just a second. I hope my screen is visible to all of you.
Yes, ma'am.
Yes, ma'am, it's visible.
Okay, so as highlighted by Ayushi, that personal finance was also covered in the first session, and we are having another session on the investment of personal finance. So you can guess that how much important the skill of personal finance and this topic is for all of you. So let's begin with the session. Just a second. My screen is not moving. Do you have any idea why this is happening?
Ma'am, we can see your screen.
Yeah, but as I'm changing slides, the screen is not changing. So
are you stagnant on it? Have you done it only on that page, or are you sharing your entire window?
Oh, I have done it on the screen itself. So I have to select no, it's not happening.
Okay, ma'am, if it's an issue, I think so you can either send it to me, Ayushi, or Sanya, and we can share the screen instead.
Okay. Let me try one more time. No, it's not happening. So, okay, I'm sending it to you. Before they even know how to manage. So managing finance involves budgeting and many other steps which we will go through in the upcoming slides. And the second leg is investing finance, and it is a very broad term. It includes many things from budgeting, from to investing in stock markets, bonds, making a financial plan, or making a plan how to pay off your debt. So it is also a very broad area, and we will discuss all the points regarding the same one by one as we go ahead. So can we go to the next slide? So if I just keep on telling you that you should invest in this security, you should invest in this category, that won't work. It is very important for you to first know why are we discussing about the topic today, why the bootcamp has 2 days devoted only to personal finance. So can you go to the next slide? These are the 3 reasons for importance of personal finance. The very first being inflation, which is we all know inflation is surge of the price of your commodities and goods. And if you are keeping money in your savings account, or if you are keeping it at your home, then the value of the currency is reducing day by day. So it is very important. The basic point about investing is you invest in a security or you invest in a sector which is obviously earning giving you more return than the inflation of the country. So if the inflation is around 3 to 4%, try to at least invest in a security that is earning more than that. Second is financial independence. And I think it is very important for everyone, and especially for girls, because it helps you um to treat the contingencies in the contingent times. It is very important that for you to be financially independent. And the second thing is, it will boost your morale, it will boost your confidence. You can face any financial adverse situation in your life. And the third point, which is the most important point, is if you are financially independent, you motivate the people around you to be financially independent as well. So managing finance and investing it give you a sort of financial independence, which is very important in today's time. Third, before coming into the investment snowball, because we have a lot to discuss about it. So there are 4 points that are mentioned in the right side of the slide, which are prioritize, assess, restrain, and discipline. So it is very important for you to remember all of them when you're managing your finance. So prioritize is, if you have to prioritize your expenses, where you are spending, how much you are spending, when you are spending, you have to keep a track of it. Because if I ask any one of you in the comment section how much you have spent in the last month, I think very few of you would be able to answer that. So this means that we are not keeping a track of any of the expenses that we are doing. And if we are not keeping a track, then obviously we won't be able to reduce the expenses. So the second thing is assess, make a financial goal or make a financial plan, and assess that the steps you are taking, the process you are following, are you able to achieve your financial goal with that? So you need to be a bit thoughtful. You can do this once a month, once a week, or as per your convenience. And you need to think that how you are managing your finances, and are you reaching to your financial goals through the process. Third is restraint. Obviously, you should restrain from unnecessary spending, from taking debt unnecessarily, from using credit cards as well, I would say. So it is very important to be thoughtful while managing your finance. And the third and the last one being, the fourth and the last one being the discipline. So if you are not disciplined, you won't even reach to managing your finances or doing personal finance in the very first place. So discipline is a very important part, and you need to be very disciplined while tracking your expenses or by investing. So now let's come into the third leg, which is investment snowball. So can we come to the next slide? So investment snowball, here it is written that how you can compound your wealth like Warren Buffett does. So in an interview, Warren Buffett was basically asked that if you have to advise a person who has just begun investing, what will you advise him? So he told that the person should spend or should invest 10 to 20% of his finances he can invest it into risky stuff. He can invest it as he wants to, but the 70 to 80% of the income or the savings, it should be invested into index funds. So index funds are basically which earn similar income to your indexes like NSE, BSE, and S&P 500. So and the term that he stated for investing into index fund is 30 years. So you can see that he also knows, and he also acknowledges the concept of investment snowball, and he acknowledged that this is the concept that made him so big. So let's go to the next slide. So this is just a comic snippet which I added to the slide. So if you have some snow in your hand and you roll it down the hill, and it will roll and become big at the end. So this is the concept of long-term investing. If you keep on investing every month or every year, and put some of your wealth into investing, so that will become big at the end, and we will be computing it live. It would have been great if I would have been sharing the screen, because I wanted to show a lot of things. um, but if I can request the person who is sharing the screen to just go to another to the Chrome.
Sure, I'll do that.
So can you write SIP calculator grow? Yeah, the first one. Yeah, select the first one. So if you see, you can see how much you can accumulate through this calculator through investing in SIPs. So if you just change the monthly investment to 2000, yeah. So you can see that by investing an amount of 2000 monthly with a return or around 12%, which any mutual fund, many securities can provide you the same return for a time period of around 10 years. So you can see on the screen that you have invested an amount of 2,40,000, but the total value of the amount after 10 years becomes 4,64,678. So this is the power of compounding. If you keep accumulating your wealth and investing regularly through SIPs or through other options, then that will accumulate and that will become an investment snowball. So in the interest of time, I would just ask Shrishti to search, open and one more tab in the Chrome and write coin by Zerodha. Yeah, first option. So this is an application by no, keep there only. This is an application by Zerodha. If you want to invest into mutual funds, which we will talk about it in the coming sessions, in corporate bonds, ETFs, SGB. SGB is sovereign gold bonds. So if you can see on the screen, there are a lot of options and which you can invest in, and you can use this application to fulfill your investment goals as well. So there is mutual funds, there are government securities, there is equity, there is funds of funds, which is a kind of there are hedge funds which are basically for institutional investors, and it is not accessible for retail investors because it is very risky. But funds of funds, what funds of funds does is it takes small amounts from retail investors and invest in hedge funds. So you can invest into that also. There are index funds, there are hybrid funds. So there are funds for all type of investors, whether you are risk averse or you want to take risk. So you can refer this application. Shrishti, can you just open one more tab
Sure.
and search a small case by Zerodha? The second option. So this is also an application. If you are beginner, if you have not started investing, but you feel that the technology sector can boom, or you want to invest into top 100 stocks, but you can't, you don't have the wealth to buy them all. So there are multiple stocks, multiple portfolios in the small cases. This is also an application by Zerodha. I use these two apps personally, so that's why I'm recommending it. You can use any other application if you want to. I'm not promoting any stuff. So you can have a look at all the portfolios after this session. So let's get back to the presentation. Okay, so we just saw that how the long-term investing works, and you can, if you have a goal that I have to have 5 lakh rupees after 10 years, so you can see how much you have to invest through SIP calculator, which we just saw. And if you want to invest in portfolios, you can use small case. If you want to invest in mutual funds and similar hedge funds and funds of funds, you can funds of funds, mutual funds, ETFs, you can use coin. So let's go ahead with another slide. So this is also a similar concept, but it states that compounding is not a get rich quick scheme. So you need to have patience, and as I have said, you need to have discipline in order to invest and in order to compound your growth. So next slide, please. Okay, so here are some tips which you can follow. These are very basic tips, and you can manage your personal finances through these easy 4 steps. So first one being devise a budget. You can use the 50-30-20 budgeting rule. I'm saying it again, 50-30-20 budgeting rule, where if you are earning X amount, you usually spend 50% of the amount on your expenses, on the minimum requirements that you have. You spend 30% of the same in variable expenses like going to shopping or eating in a restaurant and all that stuff, but 10 to 20% at least should be saved to invest. So this is how you devise a budget. You should keep a track of your expenses. As I said, you should try to reduce the variable expenses to a certain extent so that you can increase your investment part to the greatest extent. The second one being create an emergency fund. I think there has been a session on this as well, but just to add a point that this is very important and this is very understated. And we have seen that in COVID times as well, that many people went onto PF offices in order to collect the investments. So it is very important that at least 3 to 6 months of your expenses should be placed in emergency fund, so that if in case there are any contingencies or if you lose your job, so that emergency fund will protect you at all times. Third one being insurance. I just want to highlight that even if you are not able to invest, you are not able to save enough to invest, insurance is very important. And since most of you are at a very young age, so it is very important that you pay for the insurance. Whether I'm not stating whether you should use family floater insurance or personal insurance, but please invest in insurance because it is a very important part of personal finance. And fourth one is equally important. You need to account for leisure as well. If you are spending time managing your finance, if you are spending time growing them, so you should also take a pinch of your money out for vacations or for travel, and you should also enjoy your hard earned money. So all these can lead to financial goals. So you should inculcate personal finance in your daily habits. If I am today standing where I have to buy a car or I have to take a Uber to office, I need to choose appropriately in order to reduce my finances to a certain extent and using it for investing. So next slide, please. Okay, so now we have come to the second leg, which is investment. And I here it is a snip of how the investment vehicles evolved in India. So obviously, if you ask your grandparents or your parents where they have invested their money, they would say that okay, stock market is very risky. We don't invest there. We have lost a lot of amount. So most of you may have some gold at your house, and older people usually keep their money in FDs. So this is the first investment vehicle which I know happened in India. And real estate as well, because people had a habit of spending a lot, investing a lot into real estate. For example, that's how the 2007-8 crisis came in. So but it is a bit risky, but today as we evolve, there are many options for real estate investing, and we will discuss that also. So second one being stock markets and bonds. Obviously, they are a riskier category. And for stock markets, I'm not covering it in depth, but I would just say that how you can pick up a stock. So what you should do it, first of all, you should know about the economy. Are we in an expansion phase? Are we in recession? So there are two types of stock, right? Cyclical stock and non-cyclical stocks. Cyclical stocks move in with the economy. If the economy is going, they are going good. If the economy is not good, they are not their value is decreasing. So if we are in the expansion phase, you can select you can select the cyclical stocks, because they will provide you more return than non-cyclical ones. And then what you can do is you can choose a sector which you think can boom. For example, if you choose the technology sector, you can take up 4 to 5 best stocks in under the technology sector. And then what you should do is you should yourself go there is an website called Money Control, where there are many ratios related to the financial statements that they have posted. Also, if you can go to the company website and you can read the annual reports, so there is a very important section, management discussion and analytics, which you can read to see that what is the take of management on how they managed COVID, or what are their future plans. So that will help you to choose which stock to choose. And this is how you can select a good stock and keep on evaluating. And I think that choosing a stock for long-term investment is the best thing. So you should do it yourself rather than relying on any other social media post or something. So a third one being ETFs and mutual funds. Obviously, the risk and return of mutual funds depend on the person who is managing the fund, but we will discuss about this in the coming slides. Cryptocurrency, same, we will discuss about it, but it is a very high risk and return category. And there are NFTs, which are non-fungible tokens. So since I won't be going into detail, I would just say that non-fungible is something which is not replaceable. So it is something unique. So cryptocurrencies are fungible because I can know what is one Ethereum in the terms of Bitcoin. But NFTs are very unique. For example, if this is a book and I go to the market to buy this book, so it might cost me the same. But if this is a book and I have my notes and I have read this book, I have highlighted some part of this book. So now this become unique, and I can go and put it into NFTs, and this can be sold at a value. So if there is a real estate property and it is being sold to another person, so this come into the record through NFTs, through blockchain, because it also uses the same technology that cryptocurrency use. So this is how NFTs work, and it is also very high risk and return category. So can we come to the next slide? So obviously, as I said, that people used to buy a lot of physical gold in the past times. Then there are many other investment vehicles to invest in gold. For example, you can take a gold ETF. You can invest into a mutual fund that invest into gold. So they are you can invest into gold bonds. But I think this is the most best category to invest in gold, which are sovereign gold bonds. Why? Because they are backed by RBI. So obviously they are very low risk in the same. And if here it is written that the interest payments are 2.5% semi-annually. So you might be thinking that I am contradicting my own statement where I said that you should invest in an investment vehicle which is giving you more than inflation, but it actually gives 15% return per annum. So it is a good investment. Second is investment. The price is based on the value of the gold. Obviously, the taxation of the best thing about it is that it is exempted after 5 years. So there are exit options available after 5 years, but the maturity is usually 8 years. So I think, as per my as per I have researched, sovereign gold bonds are the best investment if you want to invest into gold. But I'm also not promoting anything. You should do your own research before investing. Can we go to the next slide? This is regarding bonds. As I stated, if you are beginning to invest, investment grade bonds should be your only category that you should invest in, because they are very low level of credit risk. You can invest in corporate bonds or government bonds, which fall in the category of investment grade. And there are organizations like CRISIL which provide rating to these bonds. And you should just invest in investment grade. And if you want to take a very high risk, and you have experience of investing, then you can go to non-investment grade, but I will recommend investment grade is the best category. Can we go to the next slide? So it's just that if you have other goals like saving taxes, because you might have a portfolio and you might have many securities under the same, and if you want to have a security which has less taxes or which is tax free, these are some of the bonds which you can use. The first one being 54 EC bonds, which is obviously if a bond is being issued by RBI or any nationalized organization, it will most probably be exempted from tax. So you can choose such bonds. Then there are listed bonds with a capital gain rate of 10.4%. Then there are other tax-free bonds, and you can refer this slide after the session. I hope that the team can share this slide with you if you want to refer it. So can we go to the next slide? So I think this is a very important topic because people, apart from investing in stock markets, are investing a lot in mutual funds, index funds, or ETFs. So it is important that you know how they are different. So as shown by Shrishti, we have seen how what is coin, we have seen what is small case, and a mutual fund. Many like very less people know that there is a direct investment in mutual fund as well. If you are indirectly investing through Zerodha, through using coin application, you can also directly invest in a mutual fund. For example, there is a mutual fund Parag Parekh. So if you go to its website, they require your folio number and similar details. So you have to fill the form and provide all the details like your PAN and everything, and then you will be good to go. So you can even invest in a mutual fund without being an intermediary in between. That's how mutual fund works, and why it is different from index as well as ETF is because it earns a better return. It can earn better than the benchmark uh, because it is professionally managed, and you can even do SIP in mutual funds, which we just saw that you can put 2000 or 1000 or even 500 in some mutual funds. And mutual funds are also divided into various categories, that if you want to invest uh, in a mutual fund which invest in international securities, you can choose that. If you want to invest in a mutual fund that further invest in bonds only, you can choose that. And then we have index funds and ETFs. So index funds and ETFs are a bit similar. They track the benchmark, which is usually an index like S&P, NSE, BSE. But the main difference is ETFs trade throughout the day. It is like shares, but index fund trade just at the end of the day. So they are similar in the sense that they earn a return equal to the benchmark return, but the number of times that they trade is very different. So can we come to the next slide? Oh, okay. So this is about real estate investing. As I said that earlier we used to invest in real estate by buying out physical properties, but the major problem with real estate was that it is illiquid, so you won't be able to sell it immediately. It involves in
Yeah.
very you need to invest higher amount of money into real estate. But as an investor with not that much amount of money, if I want to invest in real estate and diversify my portfolio, you have two options. First is equity and second is debt. For equity, you have real estate investment trust, REITs, and real estate operating companies. So they trade like shares. For REITs, the thing is that they distribute most of the incomes as mandated by government, so you get a good amount chunk of their return. But for REOCs, it can be for private people as well, and they can keep all the earned money or all the amount they have earned through investment to further grow the fund. So then we have for debt, we have two options: mortgage and mortgage backed securities. Obviously mortgage is not a viable option because it is usually done by banks which give loans for real estate, for example, housing loans. But mortgage-backed securities is something that if bank is giving loan for credit cards, for home loans, they can club that and they can sell it to a special purpose entity who then issue shares or securities which you can buy and you can invest in. So this is about real estate investing. Can we go to the next slide? So this is just a snippet about cryptocurrency, which has just been introduced in the budget for 2022-2023. So it states that 30% deduction will be there on any income that you have earned through crypto. But on the other hand, they will introduce a digital currency of their own to boost their economy. So till now, there is very a lot of uncertainty regarding cryptocurrencies, and hence it is a very high risky instrument to invest in. Can we get to the next slide? So why cryptocurrency? First, there is no intermediary in between. For example, government make policies, economic and fiscal policies, and regulate the economy. Banks regulate, RBI regulate the banks, and SEBI regulate the securities exchanges. But in crypto, there is no one to regulate. So that's why government is not introducing it. But we people are creating value for cryptocurrencies, and if we value cryptocurrencies, its value will go its value will rise. But if we don't want it, its value would fall. Second is flexibility. You can do it 24/7. You can buy it anytime. There is comparatively less transaction cost. And the fourth is safer and quicker verification, because it uses blockchain technology. So there are a lot of computers around the world, and if you try to edit any information in one computer, it will create an alarm for the other computers, and that is how blockchain technology works. Next slide. So obviously investing in cryptocurrency is a bit confusing because there are too many coins and you don't know which coin to invest in. I personally don't invest in cryptocurrency, but as much as I have read about it, if you want to invest in a crypto, you should see who has founded it, and is the person really investing himself investing money in the cryptocurrency that he founded. Uh, don't don't invest into cryptocurrencies that happen to make only because of some influential personalities, like we saw in the case of Elon Musk and Dogecoin. And it is very important that you evaluate which technology is being used for the coin and the background, the purpose of the crypto. So this is how you can select a good crypto, but it is a very high risky investment. So I would say that if you are beginning investing, don't invest in crypto for now. Next slide. Obviously, cryptocurrency is a high risk investment due to a lot of risk that it has. So cryptocurrency exchanges, they are vulnerable to cyber attacks. So all your information that you have fed in the system might get tampered. Second is competition. There is a lot of competition around, and there are thousands of blockchain projects. Third is regulation, because in India, they are kind of unregulated for now, and the government is not promoting it through the recent actions that we have seen. Fourth being, it is very volatile. We have seen how it just jumps one day and then falls the next day. So it is very volatile investment. Obviously, but NFTs and cryptocurrency are the future of the world, and it will come ahead in future. Next slide. So we are ending this session with this slide. Personal finance is not a rocket science. It's 80% behavior, 20% knowledge. So I interact with a lot of people, and most of them tell me that they haven't started investing because they feel that investing is something that is very difficult, or they should know everything about each and every security before getting their money into investments. But it is not that. 80% behavior generally requires patience and discipline, and 20% knowledge. I think that this session will help you acquire that knowledge. So these are the points that you should follow. The first one being plan. So you should plan your finances well, as you should know how to spend your expenses and how much to invest, and you should keep a track of all of it. The second one being read as much as you can. So you should read books like Intelligent Investor and Getting Rich Dad Poor Dad, and all those similar books that will help you a lot to gain knowledge. And you can even look for courses like CFA, or you can courses like on CFI about financial modeling, or learning the basic finance stuff. The third one being implement what you plan. It is very important that after this session ends, you go and you research yourself about the securities that you have read, or you go to the websites and check yourself what is in there. So implement what you plan and keep on analyzing whether you are going on the right path. The fourth one being watch relevant content. So obviously this is important. You can go on to YouTube channels and you can follow people like Rachna Ranade and Ankur Wareko. There's a channel Minimalistic. You can follow that. They also post a lot about personal finance. Akshat Srivastav. So all these people regularly post a lot of content regarding personal finance. You can follow that, and you can watch movies like Big Short, or you can watch shows like Shark Tank. I think it is very trending in India, so you should watch that to build your investment senses. And the last one being, now you can invest, now you're good to go. And I hope that this session is something that even if you take 1 or 2 points back from this session, I will assume that this session is successful. So go home, research it all, and give time into your budgeting and personal finances. Thanks a lot.
Thank you so much, ma'am. I think so we have some questions lined up. So I think we can start with the question session now.
Sure.
Just a reminder for the rest of the attendees, you can put in your questions in the question and answers or the chats, and they will be taken. Am I audible?
Yes, Arushi, you're audible.
Yes.
Yeah. Okay. I think we can start with the questions then. So, ma'am, the first question is, ma'am, some shares that you totally believe that will grow in the future. So what are some shares that you believe will grow in the future, ma'am?
I won't recommend any particular shares, but I think that the technology sector will boom a lot in the coming time, and there's a lot of growth for startups are even getting into IPOs, like we saw for Nykaa, Paytm, and similar shares. So I think that uh, whether it is edtech, whether it is proptech, it will grow a lot, and you should completely be, as I said, completely be updated with the economy, and you should yourself research and read about the stocks that you want to invest in.
Would you suggest Zerodha or Grow?
So I personally use Zerodha because I think, as you have seen in the presentation as well, there are a lot of apps, there are a lot of applications like Coin, and there is an application for trading like Kite, and Small Case is also by Zerodha. So I think all these applications make it very easier for a beginner investor to invest. So I will personally recommend Zerodha, but you can use any application. And also for Zerodha, there is an additional feature that I did not found in any other application. Is there is an option where they of fundamental analysis or technical analysis, where you can see the chart of how your shares are going and how it is moving within a day. And for fundamental analysis, there are some ratios and all those financial stuff that it shows.
Then one person has asked you to talk a little about real estate investment. I think so you've spoken a little about it already, but if you want, you can elaborate a little more.
Yeah, so for real estate, I would say that the equity side is a better side, which you have seen in the presentation, and I personally prefer real estate investment trust, because they are mandated by the government to distribute 90% of their earnings, and that also helps in saving a lot of taxes, because if they distribute 90% of their earnings, then the government won't tax them. So you will get additional income without deducting the taxes. And also REITs have a lot network of network of what I would say properties under them. So it's not just residential, it's not just commercial. They have a diversified pool of properties in which you can invest by like sitting at your home and not buying a physical property.
Can you please elaborate on starting your investment journey with Grow, like some suggestions? That's Astha's question.
I would just say that you should like I should tell my personal journey, or if someone else is starting the investing.
I think she means when someone else is starting their journey.
So as I suggested, a lot of applications, small case and ETFs, I think even corporates, what they do, if hedge funds, they have a lot of money, and if they are not able to search for particular investments that they want, they park their fund into ETFs because they are cheap, and they give you a return close to the benchmark at least without professionally managing themselves. So I think parking your funds into ETFs, because my personal when I started investing, my first investment was in ETFs only. And after that, what you should do is you can uh, go through small case. There are a combination of portfolios. So if you feel that okay, I want to invest in equity plus gold, because that gold acts as a hedge, and equity is something very risky, and I want a balanced portfolio. So there, I think I invested in a 200 rupees portfolio which had equity and gold when I started. So you have a diverse option from ranging from rupees 200 to rupees 50,000 as well. So you can do that, and then you can keep researching on companies and start investing and parking your money in the stock market as well.
Okay, this is actually a really nice question from Naisha. So her question is, do you think one should select stocks on the basis of how the economy behaves, or do you think they should focus on the fundamentals of the company?
I think both matters a lot, because if you choose a cyclical stock and we are in recession, the stock will fall even when the fundamentals are good, right? So we have to look at everything. We have to be aware with the economy as well, how the economy is doing. We have to get to know the finances, and you can yourself refer the financial statement of the companies that are being audited, because I think many of you might think that it is very difficult for you to even read financial statements. So how can I say that go and read the financial statements? It's just that the section of management analytics, it is very important because it tells the future path of the companies. Also, if you see that okay, we have the company had a profit of 100 in 1 year and it grew to 200, so you can see that it's growing, okay, and you can see the similar things because it's being audited, so there is nothing much fishy about it, but you have to look for other things as well in the financials.
Then one person has asked, I think you spoke about how a gold bond gives a 19% annual return. So can you explain that?
No, it's not 19%, it was 15% interest. So I would say that it was sovereign gold bonds, and it is providing you a return of 15% per annum. And they are also investing into gold. So if the value of the gold is falling, the value of the sovereign gold bond might also change as per the interest rate risk that they are facing. So it's a very good return. I think no other postal office or national government agencies offer such great returns. So you can go and invest in SGBs through Coin, which is an application by Zerodha. And the next thing being that they are risk free. So you can even start investing in gold, but you have to see that even that is gold going to do good in future, because that is also important, because SGBs depend on gold. So if you think that gold is not going to go ahead good in value, then you should not invest in SGBs.
Then one person has asked you to elaborate about blockchain.
Okay. As I said that for many things, we have a centralized organization, which is maybe government, maybe SEBI, or maybe RBI. But how does blockchain work is there are like millions of computers around the world, and that your data is stored. Like if I have bought a crypto coin, that data is stored into a computer, and it is linked to every computer that is there around the world. So if someone tries to change or amend something in one computer, so that sets an alarm, and the blockchain the block breaks down. So this is how you can't tamper with the blockchain process. You cannot change any information. So that's why it is said that if you are investing in cryptocurrency, it's safer in terms of your data being saved it there. And even NFTs, if I am using an NFT to register a real estate property on my name, then that will be kept and in the system, and it will be shown that I am the owner of the property. So that how it's work.
One question is about to brief them about ETFs and index funds and REIT and REOC.
Okay, so ETFs are basically exchange traded funds, and what they do is they create ETFs. There is an issuer who create ETF, and what happens is they try to include, like they try to buy the securities so that the portfolio return is something equal to the benchmark. So it's a kind of mutual fund where they try to ensure that the return the investors are earning is very close to the benchmark, maybe NSE or BSE index or.
Ma'am, you're muted. Could you repeat a little bit of it got cut because you got muted?
Okay. So I was saying that this is how ETF work. That ETF is a kind of mutual fund where they try to ensure that the return that the investors are earning is close to the benchmark that or the index, a certain index which they are marking. And you can buy ETFs as you are buying a share. You can buy it, you can sell it anytime you want as you trade shares or invest in in shares. So ETFs are of different types. You can buy a gold ETF, you can buy a ETF which invest in particular kind of stocks or in bonds. So this is how ETF work. And secondly, REITs. So I explained about REITs, I think.
Yes, ma'am, you had. Then there's one more question. Do you think 17 is too early to invest? If so, when should we start?
No, I don't think 17 is too early to invest, because even if you read about Warren Buffett, he started at 11. So as soon as you start your investment, that will be great. As soon as you come to know about the various investment vehicles and how you can earn better than like even savings or FDs account through stocks, through mutual funds. So it is very good that you are starting at a very good age.
One last question is there from Aasira Verma. Please suggest some resources or platforms from where we can predict that whose shares will increase or decrease, because as a beginner, we don't have such knowledge about predicting such things.
Yeah. So first of all, it is very difficult to predict that which share is going to do good. It's just that you can notice a few things. If I talk about the FMCG's companies, for example, HUL. So HUL has a branch of many products under it. So if I'm using that product and I'm liking that product service, I can go to the website of HUL and search about its financials, that how it is doing, how much loan it has taken. So you can't predict. Even professional traders can't predict how much the shares will value after a certain period of time. We don't know whether a company will default today and the value of the share just falls. So it is difficult predicting it, but I would just say that keep you should keep assessing the stock that you have bought, that and you should keep reading about the stock that you have bought or the company you have invested in, because that's how you will be able to invest for a long term.
I think so. That was it for the questions. Thank you so much, ma'am.
Yeah, thanks a lot. Thanks a lot for joining in.
So I think so. Ayushi will like to thank you.
Yeah, thank you, Ayushi. And with this, we have come to the end of the 5 days Financial Literacy Bootcamp. I would like to thank Sanya, our president, and all the members of the Girl of Aasira, without whose efforts this bootcamp would not have been possible. Also, I would like to thank our audience for their cooperation and to all the speakers who shared their valuable knowledge with us. Our aim for this Financial Literacy Bootcamp was to spread awareness about the financial literacy. The purpose was to educate each and every one of you about the various aspects of finance, and I hope that we were able to achieve that. Now, some additional information from our side. Those who have registered for the finance quiz, you will get all the information in the group. And I would also request everyone not to leave the literacy bootcamp group, as all the information regarding the certificates will be given to you there.
And I would just like to conclude by speaking a little about Girl Aasira. So Girl Aasira, as I spoke before, is a Haryana-based Indian club aimed to empowering women. We have, until now, we have had many achievements, including starting a podcast, starting a YouTube channel. We have been recognized by the director and events coordinator of Girla. We have successfully concluded the 16 days of activism and have also concluded today's Financial Literacy Bootcamp. We have 3 main departments: content department, marketing department, ideation and strategy department. And we are open to connecting and having more people join in. I will be sending the link in right now, so you can join and see our socials there as well and reach out to us. Thank you so much for joining in, guys. And I think so. We at last we would like to thank Garima ma'am again. This session was extremely informative for all of us, especially for me, who considers herself a beginner in investing. And we completely understand that it must have been very tiring and taken a lot of time for you to take out from your busy schedule as well. So thank you so much, ma'am.
Thank you so much for inviting me, and thank you for the introduction as well. And all the best.
It was a great session, ma'am. And no matter how many thank yous we'll give you, it will always be less. So thank you so much.
Thanks a lot, and all the best for future.
Thank you, ma'am. Okay, I would request everyone that if you want to fill up the feedback form, please do so. It is in the chat box. And everyone, if you are interested in joining Girl Up Aasira, please let us know.